Good good morning. Welcome to the Meltdown. Hope you're having a great morning. It's sunny out. Still pretty bitterly cold here in the Houston area. I know 32 was at my home, so it's cold out. But you know what? It's better than looking at the snow and the ice and the machinery that's scraping everything. I can't even imagine that again. I did that back when I was a kid living in St. Louis, and as a child, it was a great thing. As an adult, don't want to play. I'm going to do my show a little bit different, but I'm going to weave it together the way I normally try. Folks, I hope you've got a pen and a piece of paper. Podcasting is really a flexible issue for me, which kind of goes hand in hand with the schedule currently. But folks, it's important that you write down notes. I don't care whether you're reading or listening to my podcast, any other podcasts. It doesn't matter what you're interpreting. If you have new information, you need to be able to make sure that you can confirm it, affirm it, and make sure ultimately that what's going on and what you're interpreting is real. Now, I got to tell you, there are a lot of people who look at markets, and most do not have the experience to look broad, to accept what is as what was and what will be. We're in uncharted waters. And this morning, listening to a couple of commentators, I heard finally somebody say that with quantitative easing and the pedal to the metal, we could see 20,000 in the Dow. The crest cycle interprets the information and says maybe the top is 17, 17.5. I push it up to 18. But I've said time and time again that I believe that as long as quantitative easing stays in place, we're going to see a 20,000 Dow. There's just no doubt about it. Now, what I really find interesting is that most people are going to take some of the information and they're going to run with it. Now, my concern is that most of you are waiting on the sideline to find the top or the bottom. And I can clearly tell you that rarely can you find those markets. Now, there are periods of time where I can forecast or prognosticate that we're near a low or we're near a high. Part of what I use to interpret all of that information is what I see in the trading markets in the indexes. Now, some companies report live numbers. Others are on a delay of anywhere from as short as 10 to 15 minutes, maybe as much as 30 minutes. And things change just by somebody talking. Whether that's Ben Bernanke, whether it'll be the future Fed chair, Miss Yellen, things happen and things change radically and quickly. And whether it's Charles Bullard, whether it is another Fed president, things change radically and it happens quickly. So when I'm looking at the market, which I'm watching one of my trusted sites, I can see that we've got a trading range of palladium that's up a little over 0.75% to silver that's pushing 2 3/4%. Gold is moving, platinum is moving. The markets are strong in the metals. Obviously, they looked cheap. And when I talk about looking cheap, you've got to understand that you've got major concerns like banks. JP Morgan is the largest U.S. bank there is and far exceeds the value of the number 2. But that having been said, they've gone from a short position to a long position in gold. The gold position in the long, the futures market, is approximately 5.74 million ounces of gold. That relates to $7.4 billion. It's not a small position. They are a co-custodian of GLD. Now, this is a double-edged sword, and you've got to understand that in silver and gold, JP Morgan is a co-custodian of those ETFs. And whether they're audited once a year or twice a year, the gold or silver needs to be in the vault. Otherwise, you would have major misrepresentation, loss of the fiduciary responsibility. Folks, this is a point in time that you need to understand that an electronically traded fund, an ETF, is the paper, it's the dollar value, it's whatever cross currency you want to trade in when you come out. It is not gold. You're not buying the precious metal. You're not getting a physical delivery. It's a different game. And so whether it's a George Soros or a John Paulson or a JP Morgan or Deutsche Bank, any of them can say anything they want and make whatever was bad sound good. Sound like our government? Because it certainly does to me. Now, I look at obviously notes that I take before I come and do a show. And ultimately, I look at the cross market. I look at a mining company like AGI that puts on its balance sheet the cost to produce an ounce of gold. That cost runs from $1,050 to $1,200 currently, and that's what it's cost over the last couple of years. Turkey and Mexico are gold producers. Now, for those of us that live in South Texas, we see a lot of Mexican silver jewelry that has turquoise. And the reason that they produce so much turquoise is that you never find gold without turquoise, and you never find turquoise without gold when you're talking about mining. Now, I've known that for over 30 years because I had an interest in a gold mine, but it was black sand. And when we had that position, it was something that I did, back in the 1980s, right after the market crashed. There was a plot of property in Baker, California, quote, the gateway to Death Valley. And the black sand is everywhere. And at the cost of gold back then, when it dropped and we went into the 400, 450 range, I think for a while we were in the 540 range when gold started to get produced again by the U.S. Mint. My concern in looking at what was happening was that this gold mine couldn't produce cost-effective leaching to get the black sand into the precious metals that were, quote, inherently in the sand. Now, it was a different process, but while we're sitting in July in Death Valley, up in the hills, we could see different mines. You could see the holes in the mountain. And so the gentleman who was with us, who knew the area, explained that those were turquoise mines. And you always find turquoise with gold and gold with turquoise. It's just the way the earth was created. That's God's gift to us. Now, procuring all of that, that's where the question comes in. So I want to make sure that you understand that if Mexican silver jewelry has turquoise, they're a gold producer. So is Turkey. And all of what is being produced is being consumed. That's the supply and demand scenario that I try to get you to understand and appreciate when we talk about going from, quote, the paper market to the physical market. Now, if you're a trader, and obviously that would put JP Morgan in the driver's seat, 5.74 million ounces times $30 an ounce, which is approximately where we are at the moment, that's a huge profit. Is it enough to pull the trigger and take the profit and drop the market again? Because that's what's happening. The manipulation of the market. When you talk about a 2% gain on 5.74 million ounces, we're talking about some huge numbers. Now, I'm doing the show before Michael gets here. He'll probably walk in while I'm doing it. But folks, this is the reason why I talk about diversifying your portfolio. It just makes sense when I look at it to take the necessary steps. I'm trying to calculate this 5.74 million. That equates to $172 million that have been made since the market opened at 7:20 this morning. It's 8:37. In an hour and a half, they've increased the portfolio value by $170 million. Those are huge numbers. And of course, the percentage of profit is bigger if they're in silver, which they are. They're SLV. They're JP Morgan Chase. So this is going to reflect down into the economy. For those of us that are truly gold bugs and we're worried about where the economy is headed, I don't want to hear about tapering anymore. I'm tired of the conversation. We're going to print currency until we're dead. That's what the world is doing. That's what raising the debt ceiling is all about. And listening to other members of Congress and realizing that there are only about 3 or 4 individuals that are working on this balanced budget. Of course, Paul Ryan is on the Republican side. You get to a place where you have to understand that the budget is probably 2.5 or 3 feet high full of paper. And nobody's going to read it all. Folks, this is coming up onto the Christmas season. We all know that. So I want to reflect on just a couple of facts. I'll bring it together. You'll understand. If you've got questions, you should be calling me, 281-548-2646. That's 281-548-2646. You can go visit themeltdown.com. We've been doing this show for a few years now, so there's well over 500 shows. They're archived. In the beginning when I was doing radio, we took out the commercials, we edited it all. Now there's no editing to really have to do except if I start talking before the camera picks me up. But ultimately, this is the point in time where you're supposed to jot down notes and you're supposed to build a portfolio, diversify a little bit. People need to do things differently. And if no one's advising you, no one's telling you to get into the precious metals market, it's because they don't have a financial interest in it. I try to taper my own interest and diversify within the hedge because gold, silver, and rare coins are a hedge against inflation, bad monetary policy. And folks, the monetary policy that we're on is going to increase our economic downfall by $1 trillion a year. That's in addition to the trillion that we're utilizing through quantitative easing. The debt is huge. And whether you accept the $17 trillion debt or the $100 trillion or the unfunded liabilities that get us even higher, I'm not trying to gloom and doom you. I'm telling you that the top 1% of income earners control 20% of the wealth in this country. The middle class has been squeezed out. And while we try to survive, we go through the ups and downs. I drive around Humble and Houston, and I see gold buyers that are gone. That's because they took advantage of the fad. They signed their leases. They opened their doors. They dealt with product that was stolen from other people. I know it firsthand. Then they closed their businesses in an attempt to hide. Folks, phone numbers, tracking, cell phones, emails, you name it, it's out there. They're going to get discovered. Now, what I want to talk about also is the bailout and the numbers that came from the Fed, the Treasury Department, because it was the Treasury Department that bailed out GM and Chrysler, and this purported $10 billion loss that the Treasury took by the bailout of General Motors. It was a little over $1 billion and $1.3 billion of Chrysler. My confusion is, why would the Treasury sell knowing that GM is up 40%? Are they expecting it to collapse again? The bailout created a little over 25,000 jobs over the last 3.5 years. Pretty decent numbers. But the failure of GM and the failure of Chrysler would have cost the U.S. government somewhere between, it's reported, $39 and $105 billion. Folks, that kind of a loss is a paper loss in lieu of quantitative easing. And so how does it affect our economy when the Treasury, folks, we're the Treasury. The Treasury Department didn't lose anything. You and I did. We're the taxpayers. They're using our money. 39 to 105 billion is a threefold spread. You would be really irritated if you went to the gas station tomorrow and had to pay $10 for a gallon of gas. But on paper, the oil companies would be showing a profit. Look, oil's up today. We're pushing $98.50 a barrel. But the price of gasoline is dropping. So is the profit so much at the oil companies that they're going to give us a break? Their shareholders aren't going to be happy. And I've talked to friends around the country. I know in Florida, the price of gasoline is running somewhere between $3.30 and $3.50 for regular unleaded. They're trying to get our demand up. They're pushing the prices up. Dollars down. All currencies are up with the exception of the ruble, the Russian currency. It doesn't really matter to you and I because most people that listen or invest or are doing something aren't playing cross currencies. It's a very sophisticated Forex market. And you better know what you're doing if you're in there. Now, I keep talking about the gold American Eagle and the other types of coins that you can acquire. The cost of a 1-ounce gold eagle is now pushing $1,350. It's a 6 to a 7% spread depending on how you're buying it. And I'm looking at all of it. I watch these markets. It's really important to understand that when you talk about economics, central banks are still buying gold. We, the United States Mint, the Treasury Department, have the biggest successful year of producing silver American Eagles in history. It's definitely going to go over 40 million coins. That was what was produced in 2011. The proof silver Eagles are a sellout. Everything that was allotted got produced. Thank you to the vendors who provide the planchets because the U.S. Mint, quote, the Treasury Department doesn't have a store that's holding the 10 billion ounces of silver we had years ago. We now have to buy it. And we take our percentage as the Treasury Department to produce. Folks, one of the things that I hadn't mentioned, it's a really big topic and something you should be considering. If you've had gains in other areas of your portfolio, if you've had great stock advice, if your municipal bonds are appreciating, if you've got a capital gain, you can call the store. I'll talk to you one-on-one, but this is a great time to take tax advice and be able to sell your rare coins or precious metals. If you're in precious metals, it's a one-day trade. You are subject to the change of the market. I'll handle the transaction for 2%. So what I'm really telling you is that if you've got a capital gain, you can offset that gain by selling your material, move the loss into your gain, and obviously you offset it and you create a situation where you eliminate some of the tax liability. All of it is a positive for your market, something you should be considering now. Rare coins are a 31-day sitting period. You are subject to change in the market. You're also going to sustain the same 2% cost to handle that transaction. Ultimately, what I'm looking for is to provide you good advice. Now, those are rules that have been in place for a long time. I would always tell you to consult with your tax professional, whether that's an accountant or a tax attorney. But these are things that have happened in the past. Now, Christmas rounds are out. You're going to pay a pretty stiff premium for them, but they will be dated 2013, and you can look online with a number of other companies and give us a call. We'll be more than happy to price them. Now, I've covered most of what I wanted to cover this morning. The last area of the market that I really want to get into is talking about the grading of coins. Folks, so many of you will price shop, and I'm good with that. But understand that certain dealers are using new terms that you just have never heard of. Borderline BU. What the heck is a borderline uncirculated coin? Well, it's called AU. Except the dealers want to call it a different term to make their pricing sound better. Folks, the market's the market. And if you don't understand that or you don't believe it, call around town. Talk to some of the big companies. Get on the internet. They're out there. Coins should be graded if they're rare enough by NGC or PCGS. And I've looked at the ads in some of the trade publications. There are companies out there grading coins. I don't care how long they've been in the industry. NGC and PCGS trade on a computer network called CCE. And ultimately, it gives us liquidity. Coins that don't get graded are coins that don't warrant the grading fee. So I don't want to hear about a borderline anything. A premium quality BU, that's another term that I've seen, is just another way of saying it's good looking. It's supposed to be uncirculated, but if you buy a lot of those coins and send them in, they may show back up as either cleaned and genuine, which still costs you money to get them graded, but it's a term that real dealers don't utilize. We look at coins that grade between good and poor. That's 2 to 4 on the grading scale of 1 to 70. That grading scale is called the Sheldon scale. It's an important tool that we use in the industry. If I'm trying to sell circulated $20 gold pieces to somebody who's looking at gold American Eagles, I like the $20 gold pieces because ultimately they're different dates, potentially different mint marks. It substantiates that what you're doing is collecting, even if that's not what your real motive was. So there's a lot of different ways to look at the coin market. And ultimately, you need to email me questions, comments, concerns. Brett, B-R-E-T-T, at thegoldexchange.net. That's Brett with 2 T's at thegoldexchange.net. You can call the store if you're in the local market. That's 281-548-2646. 281-548-2646. Call toll free. That's 877-705-2646. Folks, this is the time where you need to have somebody in your corner who understands multiple markets. And I've been a registered investment advisor. I've been in the coin community for over 25 years. These are all factors that will assist you in making sound choices when you're doing things, when you're contemplating your next move. And I want you to understand the different types of markets. Why do you look at $20 gold pieces or $5 gold pieces or $10 gold pieces as opposed to looking at fractional gold American Eagles? Ultimately, these are markets that change by the moment. And if you're looking to get involved, you need to give us a shout. That way I can help answer questions, make sure you understand what we're up to. If you call the store, hit option 0 so you don't get trapped in the phone system. That's always important. Anyway, before I get off air, I always talk about Texas Children's Hospital. They are very near and dear to my heart. Yesterday, I made my delivery of toys to Texas Children's. There will be 500 children that are admitted into TCH between Thanksgiving and Christmas, and certainly they want to make sure that the kids get taken care of. There are so many different areas of the market that will, the divisions, the departments at Texas Children's and throughout the medical center throughout the country. But Downs people are very special to me. My son Jason has very mild Downs. If you visit themeltdown.com, there is a banner. Please click on it with a tithe or an offering. The information is all anonymous. I don't get any of it, but certainly the joy that the kids get at the Myers Center just south of the Fannin campus. Catherine Ostermeyer is the head of the Myers Center. They help all kinds of children from autism to Downs to any ailment, and I would certainly encourage that. The other banner goes to the Ronald McDonald House at Texas Children's. It's on the 4th floor. There's 20 rooms, between 20 and 40 people a night, maybe as many as 60. It's for the families that are visiting their children that are throughout the hospital. And so they could use a hot meal, tithe or an offering. It's all very limited because they are a 501c3 charity. But if you'll call 832-824-8600, that's 832-824-8600. Nancy Allen and her staff would be more than happy to help you. Folks, I appreciate the doctors, the nurses, and the staff at Texas Children's throughout the medical center and throughout the world. Kids are very important, and I love the people who try to assist them. Anyway, I will be back this afternoon. We will get an afternoon podcast. That's at least the plan. If you've got any questions, go to themeltdown.com, click on the banners, go to our links page for additional information, and if I need to help you, please give me a call. You can reach me at 281-548-2646. Hit option 0. You get the live voice. We'll help you out. Appreciate you listening in. We'll talk to you again later this afternoon. God bless you.